Hey, it's Clay Trader, and this will be a video chart on ticker symbol LODE. We will take a look at the 30-minute time frame. Real quick, what do I mean by 30-minute in case maybe you're new to charts? Instead of each one of these candlesticks here representing 1 day's worth of price action, which is what you would normally see, each one represents 30 minutes. So all this here may look like several days worth of time. It's actually just the past 2 days broken down into 30-minute time slices. I did this analysis yesterday, so that's where these red and green line annotations are coming from. But want to get the chart updated here. And little difficult from a presentation standpoint because there's a lot of perspective that goes into it. So what do I mean by that? Well, if you are a day trader and you bought right there, or maybe you bought right there and you wanted to sell within 15 seconds after buying, then yeah, for you the chart's looking pretty rough. But if you care about the big picture of things, then yeah, I get it, the price pulled back quite a bit today. But today, that's 1 day. When you take a step back and look at multiple days, the bulls do still have plenty of opportunity to build a higher base. And when you have higher bases being built over time, that's how long-term uptrends are constructed. And I'm going to be talking about things from a big picture perspective. So if I sound crazy calling something bullish, my guess would be you just had a different strategy and perspective going into the trade. And this all revolves around the level down here at 17.5 cents, which is what I talked about in yesterday's video. Now, I'm not going to beat that dead horse here on why that's so important, but it's very important from the storybook perspective. If you want to know why, or you don't trust me on why that's the case, I'm not offended. Just go back and watch the video from the 18th. But 17.5 cents, very important level. And the reason for that being, let's just say that the price pulls back a little bit more. Now, I'm not saying this will happen, but let's just say that the price comes down here, bounces around, and then heads back up. In that situation, what would you have? Well, you'd have a set of lows right here. You'd have this set of lows down there. If you picture each one of those as stair steps, you still have stair steps progressing in the upwards direction. Again, I fully realize that if you are a day trader and you bought up there, or but you bought somewhere around here, then you couldn't care less. You don't want to see the price pulling back more. I mean, you just don't care. But that's why I disclose that I am talking about from a grand scheme of things perspective. So yeah, the price pulled back today, but bulls still have plenty of opportunity to build a higher stair step. And that's what you want to see. That's what long-term moves are made of. As far as levels of resistance are concerned, today just pretty much reiterated the red line that I threw up yesterday, and that's right up there at the 20.5 cent mark. So 20.5 cents still where the sellers seem to be hanging out, and that'll be public enemy number 1 going forward. But right now, it's all about just going through a healthy consolidation, and I'm defining healthy as staying up above 17.5 cents. So still 2 days left this week. We'll see how the bulls close it out. One of the biggest questions that I get is, hey Clay, how do you find the stocks that you trade? So what I've done is put together a free resource guide where I talk about the tools that I use to locate stocks that I find interesting and think may have potential. So if that sounds like something that could add value to you as a trader, then click on the image that is up on the screen right now and I will email you the guide. The guide itself is very short and to the point, and best part, it's completely free. Thanks for watching the video. Let me know if you have any questions.